from a Standard Chartered perspective, what we track clearly what we're supporting our clients with. And so far this year, we've actually seen a huge increase in terms of the number and the amount of account interest in our Stock Connect and Bond Connect access schemes. So 67% increase in terms of Stock Connect accounts and a 73% increase in terms of the Bond Connect accounts. And I think that's reflective, obviously, of the increased importance of China relative to some of the investment opportunities that we have seen traditionally in the West. You mentioned, obviously, COVID. I think it's all really around competitivity in terms of capital flows. And I'm sure Andrew, in terms of some of the things that he's mentioned, really helps to explain the reason as to why there should be a greater focus. To me, I think the Connect programs still represent probably the easiest way for most institutional investors to gain risk exposure to China, albeit they do have some limitations, as everybody is aware. Obviously, Stock Connect still doesn't cover the whole universe of the Shanghai equity markets, and there are some minor challenges with the Bond Connect piece that I'm sure Phoebe will talk us through. But a lot of those are actually being addressed. So one of the issues that has been raised in the past is really around the use of third-party FX banks. That's been addressed from a regulatory perspective, and there are also obviously some thoughts really around how the actual investor universe or investment universe can be extended, widening beyond the straightforward interbank bond market into some of the exchange traded markets. And obviously that's undergoing a review right now, and I think that will add a big thrust in terms of some activity. And I know, obviously, from a financing standpoint, a lot of people are interested to understand how the bond repo market will actually be opening up on an onshore perspective. So there's still more to go. Investors are hungry for further liberalisation, as they always are. But we do see that as I was saying, in some way, the Connect schemes are still pretty much the outright winner. Just a quick mention for RQFI and QFI and some of the liberalisations there around, obviously, the way that you apply for those, and the lack of quotas and the lack of some of the previously quite stringent restrictions on actually applying for RQFI, QFI. That process still needs to be undertaken by investors, gives you a broader perspective in terms of investment, but we see less focus on that right now, despite some of the liberalisation, because the Stock Connect and the Bond Connect regimes are just so much quicker and easier to manage from an institutional foreign investor perspective.